Okay, folks, welcome back. This is our weekend edition of the ICT Mentorship, week ending January 17th, 2020. Take a quick look at the economic calendar. It's pretty robust this week. Monday, there's an absence of any real economic drivers. On Tuesday, we have the World Economic Forum. It's basically a bunch of bankers that get together and I guess they decide what they're going to be working on for the year. And medium impact average earnings index, 4:30 a.m. GBP, 5 a.m. medium impact zoo economic sentiment, 8:30 a.m. Canadian dollar medium impact manufacturing sales, 6:30 p.m. Aussie dollar Westpac consumer sentiment. On Wednesday, it's going to be the heavy hitter for Canadian dollar. High impact New York Open CPI, 10 a.m. We have monetary policy report and bank rate statement, overnight rate, and Bank of Canada press conference at 11:15 a.m. Later on in the evening, during the Australian pre-Tokyo session, we have the high impact employment change for the Australian dollar, and then on Thursday we have high impact main refinancing rate for euro at New York Open, 7:45. 8:30 a.m. we have ECB conference and skipped over one here. Monetary policy statement, high impact for euro at 7:45 as well. So New York session for Thursday, euro dollar is going to be very excited, I'm sure. 11 a.m. medium impact crude oil inventories. That's going to be sensitive for Canadian dollar. Finally, on Friday, 3:15 and 3:30 a.m. high impact news for euro, German flash manufacturing PMI, and 4:30 a.m. high impact manufacturing PMI for GBP. 8:30 a.m. New York high impact core retail sales for Canadian dollar, and $945 medium impact flash manufacturing PMI. So lots to be monitoring this coming week. Should be a lot of excitement and volatility. Alright, so we're looking at the dollar index. This is our daily chart. And as you can see, we are what looks like heading into this buy side liquidity pool I outlined last week and the week before. I said that we would probably see us come down in here in this fair value gap, hit that, and then make a run for the buy side liquidity. A beautiful delivery of price on Thursday into Friday. We'll talk more about weekly profiles in a moment. Initially, I had you all paying attention to this bearish order block in here, how that could constitute some resistance. It could offer that and sell off a little bit. And it did. And the context was selling off and filling in this fair value gap in the form of a BISI, buy side imbalance, sell side inefficiency. Over the course of the week, we formed relative equal highs. So buy side liquidity naturally be formed there, and then the 2018 high, which is seen here, and then the layered liquidity in the form of buy side liquidity pool relative equal highs here as well. I want to see it trade to here to get in sync with a long-term bias for dollar right now. It's just a draw to this point here, and how we trade there after is what I'm monitoring. So in the future, in other words, going forward, I'm using this little icon in the chart to illustrate where I believe price is going, because I have a lot of new folks in mentorship, and I understand that if you're new, and even if you're month 1 or 2, maybe even 3 or so, you're getting slammed with a lot of commentary and a lot of opinions about certain things that I share in the video, and some of them are kind of long, but you're paying for my opinion, you're paying for my insight. I'm trying to give you as much value as possible, because I could do a video and take 5 minutes and do it and have everything on the chart and then that's it. And if I were you, I would feel cheated if I did that. So I give you my time, you pay for it, and I give you a well-balanced opinion and commentary midweek and as we're doing here ahead of the new week during the weekend session. Invariably, I get a lot of emails about, people not knowing where I'm focusing, because they're lost in my Twitter commentary. The folks that study the weekly commentaries are aware of what I'm looking for and what I'm outlining. So even though it may seem like I'm being vague on Twitter in regards to specific comments or markets, I'm really leaning on the assumption that you have paid attention to what I said in the commentaries and then are looking at what's going on in the charts. And last week I outlined the Aussie dollar, I outlined the euro dollar, and I outlined the dollar index. And to make it very clear, so that way I'm not doing the golden parachute routine where it could go both ways and I'm going to point and say, see, I told you so. I'm going to use this icon to kind of like illustrate visually. That's going to be the magnet, okay? That's the draw on liquidity. This is where I believe price is being drawn up to. This level, okay, I had a guy also ask me if there's any way I could do like eye tracking, like whatever I'm looking at the chart live, it would draw attention to, I guess maybe put a cursor or something and highlight the area that I'm actually watching when price is trading. And while I am not interested in doing that, because I actually tell you what's going on and about to happen in my own opinion 2 times a week before it happens, I'm going to do the closest thing I can get to that, but also remind you and prod you really to focus on the right side of the marketplace in terms of my commentary. So I'm using this to illustrate this is where I think price is going next, okay? So every time we do a midweek or weekend review, my opinion is going to be linked to one specific level or condition that leads to a level to be drawn to, so that we can work on the lower time frames and also study the daily chart as it develops each new daily candle. So you really can't ask for anything better than what we've seen here for the dollar index. It's really nice to see it trade down and do everything I outlined and suggested it would do. I'd like to see the week start off with a lot of energy and right into that 97, 85, 98 big figure. I would be wonderful to see that. If we get a lot of excitement, it takes us above the 98.55 level, then I will be really concerned about where we go from there, because at that point above here, that's to me very bullish. So if we run these and then trade back down into the range, okay, the fair value gap that we've outlined here, that would be a level that we can start studying again, much like I showed you on the euro dollar. On its daily chart, we kept the fair value gap parameters, the high and the low of the fair value gap on euro dollar for a long time now, and you can see it's offered more trade setups. But Wednesday I told you, and I'm probably jumping a gun here in regards to euro commentary, but I mentioned on Wednesday that I'm no longer interested in those levels, and when we get to euro dollar, you'll see the significance of that, and I'll give you some more commentary in regards to it. But I want you to remember what we were expecting down here and where we're at right now, okay? And I want you to think about all the opportunities between this low and where we've closed on Friday. There was multiple opportunities in here to capture your weekly objective of 25 pips as a new developing trader. Now, obviously, there's a large body of you that are charter members now, and also that have gone further along in the mentorship and have learned more concepts and content that leads to a more likely scenario of more than 25 pips per week. Some of you don't feel confident you're going to get that 25 pips at this stage, and that's okay. That's normal, okay? You're not rushing to get to that. You're just letting it happen. But I want you to go back into your charts and study the low and the high here and really break it down on a 5 and 15 minute time frame relative to the kill zones, intraday and institutional order flow, and you'll see that there's a litany of setups that were available. So going forward, again, the bias, I'm looking for a continuation into that 97.85 level. We want to see it clear that, and how we trade there this week will be a real telltale going forward into the later stages of this month. Moving on into an hourly chart, you can see here we have the buy-side liquidity pool, as I mentioned on Wednesday, the midweek commentary. that we're going to probably run up here and take that out. And again, this level here is that old 2018 high at 97.71 for the dollar. Here we have bearish order block, fair value gap. Market goes up to that on Thursday after hitting the low of the fair value gap from the daily chart. So if you are wondering the importance of understanding imbalance and how IPTA delivers precision, this is a perfect illustration of that. I talked about this live through Twitter, and I really enjoyed Thursday's commentary tracking that and illustrating how this very fractal looks very similar, almost identical to that of the Aussie dollar, and it delivered exactly the same way. So, but we've since obviously seen the Aussie dollar, after it ran its 69.20 level, it ran up to 69.31 or 32 or something like that, and then gave up the ghost and went lower. So do I believe that's happening here? It might do it at 97.71. I'm monitoring that, but I think that it's going to go to the equal highs that I've outlined on the daily chart. That's where I think it's going to go. So unless something changes, and I can prompt you on Twitter or send you something through the forum, that's what I'm expecting to happen. So we have this area right here. I have a little question mark right there. And I want you to think about what was residing at this level as price was going lower. Now, without the benefit of having the fair value gap outlined on the chart like I have here, without having the understanding of why it's important and why we transposed it from the daily chart down to an hourly chart, one would completely be lost in regards to why it did this. Now, right away, the quick go-to is going to be, well, we went down here before, Mike, and look at it balance. It's clear, it's obvious. It went right down to the level, almost the same thing, and it rallied up. And I'm going to take you back to that discussion I had last week on Twitter, and it's not the only conversation I had in regards to support and resistance, rather. It's one thing to say, okay, the market went to a level and turned around, and therefore, if it goes there again, it'll probably do that again. If you don't understand the bias on a higher time frame, if you don't understand why this level would be significant in regards to the daily chart, just because it did this over here doesn't mean that this was a rally. Because if that's the case, why wouldn't you expect this low here and this low here when it came down to here? Why didn't it go back up like it did here and then run the equal highs? You see what I'm saying? There has to be a context that is understood about why the market should do what you're expecting it to do. And the old lean to of support and resistance just doesn't cut it. Now, there's going to be lots of examples, okay, where you can find it in hindsight saying, well, it was obvious here, look at that. But we don't lean on that. I'm teaching you institutional order flow, and that's what the question mark is really implying here. I want you to think about what was at this high and just above it. And it's going to be in the form of buy-side liquidity. Why is this important? Well, because we had the idea of retail resistance here. Now think, I'm outlining a narrative. The consolidation, the justification for traders to believe and have faith that this is resistance, so short traders can get in here, and those that want to short after they get confirmation, which is down here, they're going to go short down here, and they're going to have their stop losses up here, and their profit target's probably maybe 10 pips below something over here, but they open themselves up with this much risk. That's classic retail thought. 5 times the risk. Okay, so they're going to try to make $1 and risk $5 to get it. So obviously I'm being facetious, but nonetheless, I want you to think about the buy side liquidity that was resting here. Anyone that sold short here trailed their stop loss here as it was running lower. Anyone that sold short here has trailed their stop loss here. Okay, layered liquidity exists above this. Now, I gave you a scenario where we looked at old lows and how when price comes back to an area of an old low, how you can do the layered liquidity idea of projecting 10 pips from the lows up and then how much it will retrace back. Not trusting that, okay, this low here was broken, so therefore it can come back up to that, find resistance because it's support here, it broke, now it's resistance here. Wonderful. Sold short. And in here, maybe this swing low could be viewed as a support level. Now it's resistance, and then it went a little bit above it here, and then it sold off. Wonderful. And I concur. There's a few times where it will work like that. That's why it's one of those theories that people quickly jump on. But again, if it was that easy, where's everyone's yacht? Why isn't the statistics better than what they are? 90% of traders lose their money after 90 days or even less. So if you submit to that as fact, and I believe it's actually less time than that people are unsuccessful trading support and resistance, then you can't have a whole lot of faith, or at least I believe that one should not hold support and resistance to a high regard, okay, because there has to be something applied to it, and that's institutional order flow. So much in the same way that we looked at the old lows for the example for layered liquidity last week in the lessons, I want you to think about the same thing here. So we have this high here, and then we have a bearish order block, and then we have a fair value gap. So there's multiple things in here, at least 3 already, that leads to this level being traded to. Bearish order block, fair value gap, complete closure, swing high, buy side liquidity resting above that. Remember, it's an hourly chart, so there's a lot of smaller fractals that would justify this as an area where buy side liquidity would be residing as well. We have a short-term high here as well after running lower, breaking some equal lows, and anyone that sold short here after expecting and anticipating it as confirmation that once it go lower, there's going to be a large pool of liquidity resting right there. So institutional order flow suggests that there's going to be a large pool of liquidity in here. So when that happens, the market aggressively, after it trades to where we were expecting from the daily chart, the fair value gap, the rebalance, and returning back to their fair value gap, rebalancing, and then drawing to the buy side liquidity, as we outlined here on the hourly chart, and then obviously the daily charts, longer term buy side liquidity pool. It's not a surprise to see it run right back up to there. So once it traded there, it spent some time in there, in this range, above this level. Traders that had their buy stop here, long traders, smart money, bought down here and sold some in here. All of this is a dealing range. The market is being held in this consolidation to allow traders to look at high to low, Fibonacci, harmonic, whatever, support back to support turn resistance. They're expecting it to sell off. And if you look at Twitter, okay, some of the folks that think they understand my stuff, they were actually looking for the dollar to go lower and the euro dollar to go higher. And we weren't doing that. Okay, so people that get a hold of my stuff on the sly and read a couple things, get some PDF files or whatever, they're not informed. They are not informed. And the folks that are trying to run paid groups pretending they understand it, they're no better than them. Okay, in fact, they're probably worse. So what's actually occurring here? They're pairing orders and then they're holding price in here and allowing traders to assume short positions. And they're holding it in here, holding it in here. And every time it drops down, retail traders are selling it. It runs back up again. They drop it down aggressive again. Retail traders sell it. What's actually occurring from the smart money side? They're accumulating. Okay, they're accumulating new longs. Right in here. Okay, remember, everybody understands breakers. It's so easy. All you got to do is look at that high between two lows. No, not all the time. Once the market structure is broken and then the institutional order flow is absorbing an old pool of liquidity, there is a transition from them wanting just to run up here and run buy stops to now that of accumulation, because this is a consolidation. We leave the consolidation, come back, retest it, redistribution, redistribution, smart money reversal, low risk buy in here. Okay, this is a low risk buy in the form of reaccumulation. Down here, we'll look on a 15-minute time frame. This is absolutely the lowest in terms of low risk buy. This is a smart money reversal, low risk buy, and this is also a low risk buy in the form of reaccumulation. The market runs aggressively for the buy side liquidity pool. I have this little eye here to remind me that this area here, even though it didn't come back down to touch the breaker, okay, it didn't do it here, it didn't do it here, and it didn't do it here. So what happened in here? What took place? This was accumulation. Now, when price broke these lows and made this low into the bottom of the fair value gap, it did not create an SMT divergence. The euro dollar made a higher high as the dollar made its lower low. That's a symmetrical market. But we were anticipating the turn anyway. I'm on record in the commentaries expecting this, the very thing that you see here, happening, and it happened. So it doesn't require always an SMT there. But when you don't get the SMT divergence to form between dollar and euro, or if you have a correlated pair SMT divergence, that means from euro dollar to cable at these lows in here, one of the two is going to form. Okay, so if you have the intermediate term low or high forming, as we anticipated here, and I clearly outlined that going into Thursday from Wednesday's recording, and actually talked about it previous week, that the fair value gap is likely to fill and then go higher. So it's not a cherry picking, it's not hindsight, it's logic that I lean on. And if we don't get these turns with an SMT divergence, because it could have very easily had an SMT divergence right here, where the dollar, where we were expecting it to trade down to, the euro dollar could have failed to make a higher high there, and that would have created the SMT divergence, and then it would have been an agreement anyway. But we don't require it to happen all the time, especially if we have other factors supporting a trade idea. But here's the main takeaway, and kind of like the lesson for this week's weekending session. If you don't get the SMT divergence here, and we have the break in market structure and the scenario narrative that we were expecting the buy side liquidity pool to be drawn on, and the higher time frame daily chart to be drawn on for its buy side liquidity, then you want to be looking for SMT divergence to support a later turn, which is what's occurring here. We have a low here and a lower low here. That's what I'm drawing your attention to. Before I drop down into a 15-minute time frame, I want to bring to your attention those individuals that have the benefit of having month number 7's content, where I teach the weekly manipulation profiles, where IPTA follows very specific templates, okay, and weekly profiles, and it sometimes follows very specific daily profiles, intraday profiles. And I teach that when we get into the day trading stuff, but month 7 is short-term trading. And I give you very specific generic templates that certain things will unfold. One of those templates is consolidation Thursday reversal. And that's what we see here. What I was outlining on Thursday live with you all on Twitter was also in support with what you've been prompted on Wednesday's recording, and the previous weekend's recording, and the Wednesday prior to last week also we were talking about it. So these things were in play before the market started trading there, okay? And if we don't get SMT divergence at the major turn, you can start looking for it at the areas of reaccumulation. Because this is a market maker buy model, we are expecting price to accumulate and run to buy side liquidity. If that's the case, what you'll be able to do is, when you're in month number 7 and you avail yourself the resources that month teaches, you can look at all of the buy templates, the bullish templates for the week, and for the intraday, when you get into the day trading module, I think it's the month after that, month number 8. I may not be correct in that, so but I believe that's what it is. I think it went from short-term trading to day trading and then scalping, but nonetheless, when you get to the daily profiles, that's in day trading, and you'll be able to match up weekly profiles and daily profiles with what I talk about in the weekly commentary. So I'm giving you the bias, and then that means throw out all the other stuff that would be bearish and focus on the economic calendar. Okay, and in the economic calendar, we are looking at Eurodollar having its big impact news. While the earlier part of the week we were in consolidation. The market dropped down on the dollar, came into our fair value gap on the daily chart at the same time that the Eurodollar moved into its Thursday 7:30 a.m. New York session news. And then later on, 8:30 a.m., this was the retail sales number for the dollar. Again, same day. So between 7:30 and 8:30 on Thursday, it met the criteria that would be a bullish consolidation week Thursday reversal. We had consolidation. It went down to the level, which is the fair value gap we were looking for. Then it made an aggressive run for the buy side liquidity pool, which is what we were looking for. And then progressively working towards the old 2018 high. And then what would hopefully be the next target, the buy side liquidity pool on the daily chart for the dollar index. In this area of reaccumulation, we're going to see when we get into the Eurodollar, the SMT divergence that occurred there. But dropping down into a 15-minute time frame for dollar, I want you to take a look at that fair value gap in here on the 15-minute time frame, right in here. So we have a fair value gap. We have a 10 pip layered liquidity. So the high in here is 97.26, and it runs all the way up into 97.36, exactly 10 pips. And then it consolidates, and it comes down very close to the old high, doesn't get to it, doesn't get down to the low here, and then we have these lower lows. So we have this low and then the lower lows. So the dollar made a lower low here than it did here, okay, in an area of old order flow. So there's going to be times when you won't need the breaker. So now, since I've taught the breaker and it's out there mainstream now, it's being shared in everybody's YouTube channel that ever seen me talk about it. Now they think this is the it's the holy grail, and it's just one piece, and you still can get hurt if you don't understand context and institutional order flow. If you don't understand what the higher time frame chart's going to do, then breakers and order blocks and everything else, okay, mean threshold, consequent encroachment, all that business, you know, it's going to be useless to you. That's what the mentorship is. Me giving you my almost 30 years experience, when to reach for the certain things, and I explain why I'm doing what I'm doing. You're not going to learn this in a year, folks. It's just simply not going to happen. There's a lot of things that need to be experienced from someone that has been experienced using them. And everybody out there that's just been exposed to it, they don't have any experience with it. They have splash over, okay, when they see once in a while it works, and that's the ones that you're going to hear about from them. So we have a lower low here formed on the dollar index, okay, and during the area of reaccumulation where the old order flow was here. Okay, so they spent time in here after running the buy stops, and they gave justification for traders to want to go short, trading old lows here. So this is support, now it turned resistance. Great. Well, we're back up there again. So what are they thinking? It's time to sell it again. It went down. Oh, let's get one more time to go there again. Let's sell it again. And it went down again. They felt good, and all of a sudden they jammed it. It's over. Beautiful 10 pip layered liquidity into a fair value gap, into a bearish order block, and then we have a SMT, USDX SMT. Okay, and again, you'll see that when we get into the Eurodollar because it fails to make a higher high, as you would expect, where it does the lower low here on the dollar index. At the low, this is institutional entry drill, which is this candle here. This is your imbalance. This is the low it needs to trade to. At that low, if it trades down, then you could be a buyer. It went down below it, so here's your institutional entry drill. And then you have the low risk buy model, which is off of the smart money reversal. Look how close it would give you an entry there. And it's a market maker buy model. So all of this is the curve to the left. This is all distribution. Now this is all going to be reaccumulation of longs. And again, consolidation Thursday reversal is the weekly profile. Market has an advancement higher. We have the market really reaching aggressively above this liquidity pool here. We have a BISI form. Then comes the rebound into consequent encroachment. So you can do another reaccumulation or long here, feeling confident that it shouldn't go down below here. Buying here with the expectation that we're going to run that buy side liquidity pool here. So it's smart money reversal, low risk buy, reaccumulation, low risk buy, reaccumulation, low risk buy, and then running out the buy side liquidity and then looking for a continuation into that 97.71 2018 old high. And then hopefully progressing towards the old relative equal highs on the daily chart for its next buy side liquidity pool for the dollar index. Moving on to euro dollar. This is our daily chart for euro. So I believe I said it could reach up into 111.80 and it would still be okay and still eventually make an attempt to go lower. We were bearish on euro dollar. Okay, as a reminder, go back and listen to the recording. The only thing I was off on is the 111.80 as an upside expansion. It could do that. Almost got to the mean threshold of the bearish order block. Didn't quite get above the old relative equal highs in here, but it ramped up into the news for last week for euro. So Thursday's New York Open it gave us the turning point here. And then I mentioned how all the other retail traders are looking for buy scenarios to go higher. I'm loving TradingView because you can actually see really quick the underlying sentiment that traders are really promoting. They're out there, putting charts together, drawing trend lines, putting all these things on there, and they're saying it's going to go higher because, like I mentioned in the recordings, they're looking at this low, higher high, higher low, higher high, higher low, higher high, higher low. So you know right away what they're thinking. Okay, it's going higher. Well, it's already done what has been required of it to go higher, and it had multiple failed rallies. And I gave you as much as where I felt it would reach for an upside expansion, which was 111.80, and then we couple that with the weekly profile, which is consolidation into Thursday reversal with its economic calendar, and also attacking the retail theory that all these lows connect them with a trend line, and you'll have a trend line phantom. This is where I believe it's going to be drawn to, which is the BISI in here, and then you have some sell side liquidity which isn't going to be annotated because the BISI is also enough and sufficient in terms of annotation. If we really lose some ground, we have relative equal lows here. That would be the intermediate term target. I kept the old daily fair value gap high and low in, and I promise you it will be removed. I'm not going to have it on here after this recording, even though I said last week I wasn't going to have it on here. I really wanted to kind of like close the book on that one because I think I've done a sufficient job in regards to showing you how keeping them on your chart, or at least having a chart where it has them referenced, you can see where we are in a real historical view of institutional order flow, where there was real interbank play at old levels like this. Now, it's not just simply this old high, it's support and resistance idea, because we went all through it back and forth, back and forth, back and forth. Why would anybody look at that as a support level? You got to go through all this mess over here to get to it. Okay, so it's not support and resistance, it's the imbalance here that's been defined from this low and this high here. Okay, if you really want to be a purist from my concepts, you want to be using the original parameters, which is the low here, which I'm actually defining that wrong by saying that. It's the high of this candle, which is the low of the fair value gap, and this low, this candle, which is the high of the fair value gap. And then you would use that. So basically this low here could really better be explained and defined with here, because that was the original. That's how IPTA is going to remember it, but this is still showing sensitivity, and we saw the results of that as well. So anyway, it didn't get to 111.80, but it doesn't matter because we were calling it on Thursday. So Thursday we went up, traded into it, and ran out the relative equal highs, previous day's high, and sold off. And I told you, here comes the rain. And like the Eurythmics, it was a hit. It was simply beautiful watching it just melt, go lower. And all of the ideas and theories of diagonal support for trend lines just evaporated. And it was fun to watch all that. But we still didn't get below this low here, so we do have a small near-term sell-side liquidity pool, and I know it's not much, but that's the next one. We want to see what it does there and expand down to these relative equal highs, and then how much momentum we have after that. We'll see how we get to this BISI. Moving on into a hourly chart, you can see the level I was looking for over here, outlined on that Wednesday. We traded up into that as well. New York news, which creates the high of the day on Thursday. Again, consolidation Thursday, reversal weekly profile. Couple that with the economic calendar and the commentary that I give you on Wednesday and the previous weekend. All those things come together. Okay, a lot of folks are demanding, in their first month here, tell me how to build the daily bias. Well, I kind of give you a framework that builds a daily bias with the low resistance liquidity runs in month one. So if you study that, it gives you a framework to use to find not an everyday bias, but at least a couple times a week where it's available to you if you understand what you're looking for. And what are you looking for? Low resistance liquidity runs. So we had a buy side liquidity pool here, a little bit of an imbalance that remained there, as I talked about in last week's recordings. Buy side liquidity pool formed here, and we also had relative equal highs here as well. The market expands up, runs that, creates the market reversal on Thursday, and we also know that Thursday's New York session, typically, even if we're bullish, okay, so let's play devil's advocate and say, okay, this isn't a consolidation reversal Thursday. It's a bullish week that just met a market reversal profile in New York. Okay, great. It's still saying the same type of thing because you're bullish on a week until when? Thursday's New York Open. So generally that's going to make the high or the low of the week. For a bullish week, generally there's a high probability that the high is going to be formed on Thursday's New York session. And we see it. So here's Tuesday's low of the week and Thursday's high of the week. It happened on the economic calendar. It happened at the level I said. And also how aggressively moved down and attacked all of the what? The supposed upside breakout to diagonal support resistance ideas, these diagonal trend lines, which I can't stand. Using a market efficiency paradigm, okay, pairing up smart money with dumb money, the retail trend line phantom is, again, and I teach this in the mentorship. So I mentioned it in the recordings last week, and here it is. It gave it to him. It started the rally, and right where the eyeball is, it rallied right up into an SMT divergence, a USDX SMT divergence. So at this high here, it should have made a higher high. When the dollar index made its lower low, remember on the hourly chart, I had that little eyeball there, and it made a lower low on the dollar during that reaccumulation phase, but it didn't get to the breaker. This should have made a higher high. It didn't. So even though it didn't get to this bearish breaker here, it did it here. It doesn't need to do it here. It's already done the work here. And this run here is just what? It's the bait and slam for retail. They're going to say, oh, yes, it's definitely a trend line. We need to buy it. And they put the brakes on it. I also mentioned that we had a new concept that I introduced, immediate rebalance versus a fair value gap, which is a deferred rebalance. This down close candle, the next candle we open and immediately rebalance to it. Okay, so we have an immediate rebalance there, and the market starts to have a beautiful down movement here, and we're most likely going to open up the week probably gap down. I'd like to see that happen. Trade up, fill the gap, and then go lower. That's the scenario I'm looking for Eurodollar. Moving on into a 15-minute time frame. All right, so here's our buy side liquidity. Runs up into that. It spends an hour above previous day's high, allowing traders to do what? Trust all the bull flags, trust all the breakouts, trust everybody on TradingView that's got more followers than I do. I know I'm being bad, but this is where the work is done. This is the manipulation. And using the weekly profile, using the daily profile, using my bias and commentary and experience in the commentaries telling you what should take place. There's your weekly high. It's also your daily high. The market breaks down. You miss it. What happens? You wait for what? Your institutional entry drill. This is what I taught. And all you got to do is look that up if you're new and you haven't gotten to that lesson before. Just do a search in the forum. You'll see that there's a lesson I actually teach here. And you only need to trade back to this high. If it trades there, that would be a sell. And your stop would be above the high. So you're selling here with the expectation it's going to break lower. You have a bearish breaker here. Trades up into it here. Trades up into it here. Consolidates actually. And if you go and look at Twitter, I told everybody to pay themselves basically. And all I was doing is using the imbalance that it closed up over here. And it traded at the breaker. So it could have hit this and retraced up into here. That was a likely scenario. That's why I was concerned about it. And it's also another return to a bearish breaker here. So it could have done that. That's why I tweeted, pay the trader, because it was here, rebalancing at a breaker that's bullish that could lead us up to a return back to a bearish breaker. And it stayed there a little bit and then went a little bit lower. That's okay. That's typical ICT. I'm usually getting out between 10 to 20 pips before the actual low. I don't want to be in there waiting for the last trade to pair up with me. And I suggest you do the same thing. Don't demand everything. Your analysis can be calling the actual highs and the lows, but you want to be getting the meat in between. Okay, you can eat really well doing that. On Friday, we have it rallying here, created an imbalance, fair value gap, bearish order block, it returns back to it here, perfect, rebalance, bearish order block, tags it again, and USDX SMT at a point of redistribution. Because we have what? Consolidation, reaccumulation, smart money reversal, low risk sell, redistribution, and then right over here, look what happens. We went into the old daily fair value gap. It trades into it, and I told you Wednesday we don't want to look at it anymore. And did it offer a lot of support here? No, not like it did here. Did it offer a lot of support like it did the consequent encroachment here? No, but look what it did. It went back to an old fair value gap. You're not going to see this. Yes, it's coupled with a fair value gap of its own in here, but look how strong that is because we have an old area of old institutional order flow. They rebalanced it here before. There's an interest there. IPTA will remember that. Trades up into it, and then beautiful opportunity to sell short. Also with the overlapping of consequent encroachment, what's it going to reach for? The lower end of the fair value gap, and then the sell side liquidity resting here. And then ultimately below this low, which doesn't show on this chart, but you can find that on your own chart when you zoom out at 110.85. So we'll see, hopefully, a continuation. So as I'm reminding you here, recall Wednesday I stated that I'm no longer interested in the daily fair value gap outlined with this daily fair value gap high and daily fair value gap low. And price moved effortlessly through it and to attack the sell side liquidity. So look how nice this traded through here. Really, really nice low resistance liquidity run for the sell side liquidity, and then making an attempt to get down here. But it offered no support whatsoever, whereas in the past it did. Now, I want you to study why you believe I took our attention off of this fair value gap on Wednesday. Okay, there's your homework for those individuals that have gone through or at charter level. All right, so the other pair that I wasn't really that interested in, I mentioned that very clearly. I was only focused on the euro dollar. GBP daily chart, we had our buy side liquidity pool here, sell side liquidity pool here, and a fair value gap. It was actually very ugly, and I'm very pleased to have outlined and guided you in regards to which pair to be focusing on. I did give you a point of reference for cable. I said that we had a little bit of an imbalance in here. We had a buy side liquidity pool in the form of relative equal highs. It could probably reach up into that and then maybe roll over. It was really, really sloppy in here. It did it and ran a good 20 pips or so, a little shy of 20 pips, and then aggressively sold off. Bearish breaker, it hits it here, and then really doesn't do a whole lot in here to justify another new entry. And this fair value gap didn't really offer a whole lot unless you want to consider this, and I wouldn't consider it myself. And dropping down into a 15-minute time frame, you can see we don't get to the breaker except for this one here and doesn't come up. But then we have optimal trade entry with an overlap of that old fair value gap. Okay, so you can see how you can use specific PD arrays and overlap with context. Remember, the bias was we wanted to see it trade lower, but the better trade was in euro dollar going short. We trade down to the fair value gap here, the larger shaded blue area. We get down to it here, and then we breach it, and then we have this little bit of a pop here, which I don't have a whole lot of significance placed around that. I do think that this is an interesting area because we have sell side liquidity here and a BISI that could be rebalanced, and then we'll see if we want to get down below this area here made on the 14th. I'm not so sure what the British pound, I don't know. So again, we're only still focusing on the euro dollar. I think that's the better point of focus for now. For those individuals that are charter members, I've given another day of grace to get yourself where you're supposed to be at, because some of you didn't make your payment and you've been here for a couple months now at month 12, and you were supposed to pay charter. That's what gives you continued access, and some of you didn't do that. So tomorrow afternoon at 3 o'clock, I will be removing those individuals, and then I will upload the trading plan for price action model number 1. I lost some time today, and I want to share this with you, but again, I'm not looking for you to make a big deal out of this. I asked this the last time, and it made its way onto Twitter, and I didn't like that. So my mother-in-law, as you know, if you've been here for a while, she's been fighting cancer, and she's fighting lung cancer. She had a lot of her lungs removed. She has very small portions of what she has left, and she's constantly on oxygen and such. It has moved to her brain, as some of you are aware, and we had a brain scan done, and they did I forgot what they call it. So it's like a chemical knife or something like that, where they go in and they try to remove it with the technology that they're using now without actually going into her head and cutting it. So we were hoping it was going to be more successful, but it hasn't been successful. In fact, they found more lesions on her brain, and then they've also just recently found more lesions on her lungs. So she's at that point where she's telling my wife she doesn't feel she's going to be here, for the full year. Like, she feels like she's going to fade pretty quickly. And being married, I have to do what I have to do as a husband, and that will obviously take precedence over being a mentor and being a dad. So that's what I've been dealing with since this morning. She didn't want to tell me right away, but I knew something was wrong, and I just kept badgering her and saying, what's going on, because she wasn't real talkative, and then she just basically told me, I just told you. So the reason why I'm telling you that is I like to keep myself on schedule. I don't like to be late. I don't like to miss my delivery windows, but I want to ask for your cooperation, because I don't have the energy to do it today, but I will have it done for you tomorrow. So if you have any faith, I would appreciate it if you would consider my mother-in-law. Her name's Bonnie, and if you could just keep her in prayer, I'd appreciate it.